After completing Accounting 8.1, the work together, and the on your own, you are now ready for Accounting 8.2. And we are now ready for our very last step in the accounting cycle, which is preparing a post-closing trial balance. Basically what this is just to double check and see what our balances are. Once we get to this point, you are going to notice, again, we'll be taking a look at our general ledger and our balances. If you have done everything correctly, the only thing that should have balances are accounts that are assets, liabilities, and owner's equity. If you have any accounts that are from the income statement, which represents revenues or expenses, then something is incorrect. It's just another way to check. So, taking a look then at our notes. A post-closing trial balance is a trial balance prepared after the closing entries are posted. Again, this is to help us check to see what areas that we still need to make sure that are correct. We're just making sure everything is correct. When an account has a zero balance, lines are drawn in both the balance debit and balance credit column. The lines assure a reader that a balance has not been omitted. And again, we did this when you posted to the ledger after you did your post-closing or after you did your closing entries. Again, the purpose of a trial balance is to ensure debits and credits equal in the general ledger. And again, we've not made any mistakes. We are then confirming that we are carrying over the accurate accounts that should have balances, which represent our permanent accounts, assets, liabilities, and owner's equity, versus our temporary accounts, which should not have a balance, which are our revenue and our expense accounts, and then also the drawing account. Now, only general ledger accounts with balances are included in a post-closing trial balance. This is different than when we create our worksheet. Remember, when we create our worksheet, we record every single account that we have, whether it has a balance or not. But in our post-closing trial balance, we only record the accounts that have balances. And as we are learning, at this stage, once we complete the full accounting cycle, the only accounts that should have balances, assets, liabilities, and owner's equity accounts. Because only accounts with balances appear on the post-closing trial balance, only permanent accounts appear on the post-closing trial balance. And again, the only permanent accounts that we have learned to this point: assets, liabilities, and owner's equity. The total of all debits must equal the total of all credits in a general ledger. Once this is the case, the general ledger account is ready for the new fiscal period. Now, this is different from the balance sheet and the income statement. Remember, when we completed our financial statements, we weren't looking anymore at debits and credits. On our income statement, we were focused on our net income or our net loss, which is income minus our expenses. On our balance sheet, we are focused to determine that the accounting equation equals assets equal liabilities plus owner's equity. Now, as we do our post-closing trial balance, we are back to confirming that debits do equal credits. The reason for this is since we did the financial statements, we recorded adjusting entries and we recorded closing entries in the general ledger. Therefore, we need to confirm again that the general ledger accounts are correct and that our debits equal our credits. So let's go ahead and practice this. Go ahead and turn in your book, your workbook to page 169. In order to complete the 8-2 work together, you are going to need the post ledger or the general ledger accounts for work together 8-1. Again, you need to confirm that those balances are correct before moving on at this point. So please make sure that in 8-1 video that you double checked your balances and that they are accurate. Now we're going to take a look and we are going to start on page 161. We'll actually start on page 169. You see I have our general ledger accounts. Our first account is cash. The balance for cash is $4,900 debit. Therefore, and as we prepare our post-closing trial balance, just like everything else, we're going to start with the heading. The first line is always the company name. The second line is the document we are creating, and the third line represents the date. So our company is Fix It Now. We are preparing a post-closing trial balance, and our date we will put is April 30th, 2017. Now what you're going to do is you're going to take a look at your general ledger accounts, and you're going to take a look at the balances. So you need to start back on page 160. In your post-closing trial balance, you are going to record cash debit $4,900. Again, taking a look at the general ledger on page 161, petty cash has a balance of $75 debit. Therefore, I'm going to record petty cash, debit balance, $75. Accounts receivable, B. Waddell, has a balance, $1,387 debit. Therefore, I'm going to record that as a debit. Supplies balance, $75. Prepaid insurance, $250 debit. Flipping to the next page, 162, accounts payable, Southside Supplies, credit, $267. Connor Whitney Capital. Again, we had several transactions that took place, 2 transactions, and now our current credit balance is $6,420. Now, as I take a look at the rest of the accounts, drawing, 0 balance. Income summary, 0 balance. Sales, 0 balance. Advertising expense, 0 balance. Cash short and over, 0 balance. Insurance expense, 0 balance. Miscellaneous expense, 0 balance. Supplies expense, 0 balance. Utilities expense, 0 balance. Therefore, because those have 0 balances, I do not want to record them. And therefore, your last step is to draw a line, and you want to total your accounts, confirm that your debits do equal credits, and then you're going to draw your double line. That is it to the post-closing trial balance. So to review, all you do is you are taking the accounts that have a balance and put them into the post-closing trial balance. The only accounts that should have a balance are permanent accounts. The permanent accounts that we have learned to this point, assets, liabilities, owner's equity accounts. If a revenue account or an expense account has a balance, then we know we have made an error. Now go ahead and complete 8-2 on your own.